Well, good day there, Wealth Press viewers, subscribers, investors, and traders. It's that time again. It's another Monday morning roundtable. And this week I'm joined by Jeff Yasteen, Jeff Zaninieri, Adam Sarhan, and Roger Scott. Gentlemen, welcome.
Morning.
Thank you for having us.
Morning.
Well, gentlemen, here we are 3 weeks away from the election. Donald Trump has been cured, and the rhetoric is ratcheting up. Markets looking decidedly non-committal at this point today. And so let's start with Jeff Yasteen. What's the outlook for the week, Jeff?
I would expect some choppiness here. You know, we've had a pretty good move considering where things were a few weeks ago. And, generally my position hasn't changed, expecting this choppiness. Overall, I think we're going to just continue to work our way higher as this rally sort of broadens out a bit here. But it's going to take a while. We're going to have to get past the election for anything to really start happening. That said, there's still plenty of pockets of sectors that you can buy that haven't participated or have not participated very much in the rally since March. So it's still a target-rich environment. Let me put it that way.
Jeff Z, what do you have to say about the market this week?
Yeah, so we've seen yesterday was a crazy day. I mean, you had some big companies, trillion-dollar companies up over 5% in a day. And that's, on a daily basis, extraordinary. It doesn't happen a lot. So people are starting to chase, big cap tech. They're starting to chase the high flyers still. There's a lot of, in my opinion, loose money trades are still happening. You saw Bitcoin got a bid, not because it's a store of wealth, but because it's a speculative entity. And I think that continues. You're seeing banks coming out with pretty good earnings, but not bid, which is troublesome. I think that this is going to be, as Jeff White just said, it's going to be a choppy month. That's my case. I'm sticking to it. You're going to have running too hot on the NASDAQ pullbacks. Don't chase on the hot days. Give it a day and wait. Take a deep breath. These days I'm doing a lot of hand holding with subscribers on that sort of thing because they're generally experiencing negative psychological impacts on both really good up days. We have good positions because of FOMO not being in big enough. And on the big down days, the world's ending. So the overreaction, thing is happening a lot. And that's something that I think newer traders really need to learn how to manage because you'll never win that battle. You'll never have enough size on in the best trades. You'll never time it perfectly. And you'll never get rid of that feeling of nausea when it's not going your way on those days. And all of those things will continue to happen indefinitely as long as you participate in capital markets.
Yeah, you bet. Adam, what do you think about the markets this week?
So I'm still bullish. If anything, I'm more bullish now. I think it's a tale of two tapes, if you will, instead of it just being a stock market, a market of stocks, meaning if you're able to focus on the strongest areas of the market, i.e. the NASDAQ and NASDAQ 100, stay-at-home stocks, you're doing phenomenally well. If you don't focus on those areas, then it's choppy and it's sideways or it's straight up down. I mean, Delta reported earnings this week and they reported a big loss as expected. My view is we're entering the heart of earnings season over the next 4 to 6 weeks, if not 8 weeks. That's front and center for me. I want to pay attention to two things. Number one, how each individual stock reports and what the actual numbers are. But more importantly, number two, how the stocks and the market react to the news. So if we see lousy numbers but a bullish reaction, that's a very, very good sign. If we see strong numbers but a bearish reaction, that's not so much a good sign. But stepping back, the market, had a huge run from March to August. It pulled back in September. It was a normal 3 or 4 week pullback. It was steep and it fast, but it pulled back. It found support and now it's taken off and it's up for the month nicely. And as long as September's lows hold, I'm still in the mindset of we're going higher.
Okay, great. And Roger?
Well, I'm looking at momentum levels this week again because both the 50-day and the 200-day moving average are in trouble according to the NASDAQ, just the NASDAQ for now. You've got 90% of stocks trading above the 50-day and the 200-day. Historically, that's telling us that we're going to see some sideways or some minor downside corrective action over the next few days. Also, we've got a lot of consumer sentiment news this week coming out. We've got retail sales. We have industrial production. We've got PPI, CPI. We've got a lot of news that are going to give us clues of how the economy is heating up. And I agree with Adam Sarhan in terms of it's going to be very important to see how the market interprets that news technically. In other words, does it shrug off weak news? Does it rally on slightly bullish news? That's going to be very, very important. Another factor is the Russell 2000 for second day in a row is not leading anymore. It was leading for about 10 sessions ever since Trump got COVID, or ever since the first battle we had between Biden and Trump. And right now, about 2 days ago, this week at least, the tide has turned again. So that's telling us that Trump may be gaining a little headway in the election for right now. So I am choppy right now. I am defensive. I think the market's going to be choppy. I'm in agreement with pretty much what everybody else says here. I'm not seeing anything really that different. I want to see how the market is going to react to the news this week. And at the same time, I would be very, very cautious on the NASDAQ and extremely picky. And if I was going to buy stocks from the NASDAQ, they would be really, really limited to only the best stocks that are completely shrugging off this down. Peloton, the Zooms, the same stay-at-home stocks that have been rallying and leading the market, maybe a handful. Other than that, I would completely walk away from the NASDAQ and I would look at industrial, basic material, and transports. I think transports are going to be a very, very powerful sector over the next several months. And I'm looking at, I'm moving back into blue chips and basics right now and cooling off of the technology sector as a whole.
Okay. The airlines, I want to just focus on those a bit because in the absence of a stimulus package, that's a major segment of the economy in terms of employment. And is the airline sector in a position where it might start to weigh more heavily on the stock market generally because of its economic crossover? And Jeff, why I'm going to start with you on that. I don't know if you're following what's going on in the airlines right now.
Yeah, I am, and I have to tell you, I think all the bad news that's out there is already reflected in these stocks. And you would think, given all the warnings about second wave and all the other things that we've seen, put out there in the headlines of the news, that these stocks would be, somehow making new lows. And instead, the down days aren't that bad. The pullbacks are relatively shallow. And, to me, it's like if you keep looking at stocks, the vaccine stocks, not to switch topics, but if you look at stocks like those that continue, like Moderna, continues to make moves higher, to me, it's like you see that move higher, then you need to go back and take a look at all the stocks that Rogers mentioned and Jeff Z and Adam and myself, because as long as those are moving higher, the vaccine stocks, then you've got to look at the travel and leisure sectors as places that, again, are one of those lagging areas that's going to come back strong. And it's going to do it long before the actual vaccines are, fully out there. So you have to just sort of anticipate and figure out where it's been, what's the worst case scenario. I think we already saw that back in March.
Sure. So Delta posted a $5.4 billion loss in the quarter. To me, that's kind of what got my attention. It's like, just as I thought that the worst has passed for the airlines, it seems to continue to get worse. And Jeff Z, do you have an idea as to, is this the bottom for the airlines and it's just going to bounce along from here, or can it go lower and is it going to get worse?
So I'm a bit of a trend follower. I want to see the bottom already put in, and I can miss the first 20% because then they'll double from there. From an investment standpoint, I don't like to get too cute and have to, they don't ring a bell if you get the lowest shares of the stock. It doesn't matter to me. So is it all-time lows? I have no clue. I don't like the fact that they require the federal government to subsist as the business that they have now. I don't like that. There's quality businesses that you can buy right now that don't need a bailout to make money. The banks, for instance, which I've been bullish on, haven't moved a lot. They're still cheap, but they're posting like JP Morgan came out today and they have the same levels of earnings as Q1. They have better capital reserve ratios and they're trading at a much deeper discount to where they were at. So if you're going to be looking for cheap, I guess, from an investment standpoint, I'd rather look at, sectors that could survive without like a massive shift in how they do business or needing help from the government, because you're going to have this battle dragging out in Congress for a long time. And right now, all these numbers that are coming out, and Adam was talking about this too, you're getting strong earnings, which is why we're bullish, because a lot of companies are doing really well. That's fuel for Mitch McConnell to say, no, guys, I'm not giving you $2.5 trillion. I'm not, these airline CEOs were buying back their stock for 10 years and giving themselves tens of millions of dollars in bonuses. And now they're coming to us and they need $30 billion and they need $25 billion just so that they can go back and stay as a quasi public company. I don't know. For me, I'm just like, I guess I'm too harsh a capitalist I don't like my stocks meddled with by the government.
It smacks of socialism, doesn't it?
It's just not my thing.
Right.
I'd rather we don't need you guys. We're kicking ass over here. Just stay out of our way. My
Right.
bigger concern is like who they're going to regulate.
Sure. So the Fed has demonstrated willingness to implement policies restricting share buybacks and CEO bonuses and compensation, especially by those who accept major bailouts. So is that a factor going forward? And Adam, I'm throwing this one to you.
Sure. I think buybacks has been a huge piece of the puzzle, the bullish puzzle, if you will, over the last decade or so, since 2009. And we've seen an environment which has really never existed before in modern economic times, where you have ultra low interest rates, number one, since 2008 or 2009. Number two, you have a massive Fed put or injection from central banks all over the world, stimulating markets, and some central banks going negative on interest rates. I mean, and for this long of time. And then back in March of this year, of 2020, we saw the Fed just say unlimited QE, we'll print unlimited amounts of money. So what this has created essentially is an experiment, if you will, or a hypothesis, like a scientific method. You have a hypothesis, you test it. If it works, great. If it doesn't work, you test another one. The problem is this is real life. It's our money, it's our lives, it's our economy. How this ends is anybody's guess. People are hoping for a soft landing, but many fear a hard landing. Historically, if you go back and study history, these bubbles burst and they end up in tears. You get a big sell-off, a bear market, depression, a great recession, whatever, what have you. But as of right now, where we are, the game of musical chairs, the music is still playing, people are still dancing, stocks are still going up. That buy mode and basically dismiss all the negative news is still front and center. And as long as that remains at play, then it's going to be the rising tide that lifts the entire economy and everything in it. Now, once the music stops, meaning the markets stop responding well to all of that easy money sloshing around the world, then we can see really there's a big question mark. No one knows what's going to happen.
Mm-hmm. Okay. And Roger, the sort of the follow-on question to all that then is, what are you telling your subscribers today?
Well, I'm not looking at tech. If I am looking at tech, it's literally maybe the handful of the cloud stay-at-home stocks that have been just bucking all trends. Even those are a little more, the volatility levels are getting a little high. So the risk is getting higher on those stocks right now. I would stay with retail sales, freight shippers, packaging companies. I haven't changed my tune in a few weeks, and I'm still staying with that. I think freight shippers, they were number one 2 months ago, they were number one a month ago, and they're only increasing in relative strength. And I think you have to right now start being more strategic. I think just going with the stay-at-home angle isn't working, because if you look at the top relative strength stocks, 2 months ago, they were all stay-at-home tech healthcare stocks. It's a lot broader now. You've got Hainesware, Whirlpool, FedEx. The top 500, the top 50 stocks in the S&P are not tech anymore. There's a few in there. You got the Apple, the Nvidia, the AMD, but now it's very broad. You've got a lot of shippers, industrial, basic material, fundamental stocks that are making new highs. That's where the money is right now, in my opinion. And it's been rewarding us pretty well for the last 2-3 weeks, and longer in some cases.
Sure. Okay. So then looking at the conversation, I mean, it's almost very redundant to discuss the effects of the coronavirus, but I can't help but notice that in some states, the numbers are starting to exceed the original infection rates from back in March. And while that is having a sustained uplifting effect on certain headline treatment stocks and virus stocks, Regeneron, Gilead, to a lesser extent, some of the more experimental ones like Novavax and Cytidine. To me, it seems like there is a strong argument that there still might be a lot of momentum to the upside in these stocks, particularly as the influence of an increasing infection rates imposes itself on the available liquidity in the marketplace. My question is that a sector we should be possibly looking more warmly at than the sentiment we have generally expressed to date? And I'll start again with you, Jeff. Why?
Yeah, I guess the short answer would be yes. They're all speculative bets, right? We don't know. Like I mentioned, Moderna earlier. All it would take is one bit of news that they had a patient fall sick, or the different challenges that all these companies have to deal with as they go through this late stage part of the clinical trials. So when you're approaching them, just approach them as speculative ideas. Moderna might get to $1 a share in earnings 18 months from now if the vaccine and all that works. If they have a hiccup, it could be a lot longer than that. The stock could fall 20 or 30%. We just don't know. So you just have to approach them. To me, I just approach them like Moderna. I have a position in it myself, and I just look at it as it's a speculation. So I'm buying it. I'm just using momentum and risk controls, and just figuring the rest sort of takes care of itself. One of these is going to take off. Might be Moderna, might be something else, but when it does, it's going to run. And I think at some point soon, we're going to get to a stage where there's essentially gets kind of funneled down to a couple of winners, and the rest are ones that probably are going to not really have it work out for this stage. They'll probably use that same technology to help them with other solutions to other kinds of illness problems.
Right. Okay. And so, Jeff Z, what do you feel about those coronavirus stocks?
I feel, excuse me. I feel that it's almost like earnings estimates, where when you have really high expectations, you're priced to perfection. If you slightly miss, you get smashed. If you make them, you might go up a little bit more. And I feel like there's such optimism that there's going to be a massive breakthrough. And what's not being talked about is the what if this shit doesn't happen in the next 2 months, like everyone's expecting. Everyone has got November, December, at the latest, like January Q1, full vax starting to be distributed. Like we're getting there. We're on the road to that. What if that doesn't happen? That scares me. So from a risk reward perspective, you're trying to make an extra 10, 15%, but you're willing to like lose 30, 40%. Not how I trade. If you're investing in these companies for the next 3 years, now that's an entirely different mathematical equation. But just my mentality about it. It's kind of like an earnings, a company that's run a lot. Earnings are priced in the sky. If they have the slightest hiccup, if they give the slightest bit of forward guidance that's a little bit tricky, stock gets smacked. I don't know.
Sure. Okay. Well, more in the context of so AstraZeneca had a sickness that occurred during their trial. They suspended the trial. Johnson & Johnson has now had an unexplained illness during the trial, and out of an abundance of caution, is my assumption, they have suspended the trial. Because a patient who is sick gets sicker during a trial does not necessarily imply that the vaccine under trial is the cause of that sickness. To me, is evidenced by why AstraZeneca quickly resumed the trial, and I expect the same will happen with Johnson & Johnson. So I don't care about those small hiccups that are obviously going to come in such a high-profile trial as COVID is generating now. But more, I'm looking at the earnings, and I'm giving an example. I'm not necessarily talking about vaccine stocks, but testing stocks, for example, Quidelcorp, the company that President Trump endorsed publicly back in May, since his endorsement, reported just basically a 100% bump in earnings Q on Q since over the same period last year. And so there are these pockets of extreme value where the earnings are not yet necessarily reflected in the share price. And that's what I'm getting excited about. And because I have a large following in the COVID sector of less followed, I mean, it's pointless to recommend Regeneron, Gilead, AstraZeneca, J&J. These guys have multiple business lines. It's like saying, if you want to buy an exploration stock, buy Exxon. Forget it. It's useless. So I'm focused on trying to find these exceptions. And that's why, to me, I'm always very sensitive to the sentiment that I might be a little bit blinded by my own enthusiasm thanks to my interest. And so I understand where you're coming from, Jeff C. You're a trader. You're not playing the 3-year investment based on Q incremental earnings growth and better net income. You're focused on the shorter term trades. Adam, if I'm not mistaken, you're more oriented towards the investment time horizon. So do you have a different outlook on the COVID stocks specifically to any sector or more generally to the whole sector?
Yeah, so I'm in that intermediate term time frame, and my view is very simple, is that we're in a situation where I like to say we're one headline away from a cure or from a vaccine. And to your point, James, and also to Jeff's point as well, Jeff, looking at it, if the stock misses earnings or it doesn't meet the lofty expectations, the stock gets whacked. But what if they actually come out with a vaccine, which is my hope, and almost every 7 billion people in the world are hoping for a vaccine, and we actually get that? What happens to earnings there? This becomes just a powerhouse. And the stock's not only going to double or triple, even from these lofty levels, it could go up even more. So I always try to take the optimistic or bullish outlook when prudent, not be blinded optimist. But at this stage of the game, it's working almost perfectly. Last time or a few weeks ago on the show, I mentioned the biotechs. The IBB was a good leading indicator because it topped out before the NASDAQ, so on and so forth. And yet again, it worked perfectly. The biotechs, the IBB went straight up and the NASDAQ is now following. So as far as I'm concerned, I think the world is looking at the vaccine, and it's a ticking clock until when we get it. I don't think that this is going to last forever. Could we be 3 months behind? Absolutely. Could it be 6 months or 12 months behind? Possibly. Hopefully not. But it's going to take time. But I think at this stage, people have the understanding that A, it's going to be okay. We're going to get through this. It might be painful in the short term, but a year, 2, 3 down the road, the pandemic will be over. And then B, more importantly, when it does end, we're going to come out stronger because of all the stimulus that's there. So that sets a stage for bullish action. And to your point, James, too, about these stocks, having a bad case with AstraZeneca or J&J, a bad guy or, a bad case or here, there, it's going to happen. It's inevitable. But what I look at is the stock price, because the market, AZN, AstraZeneca hasn't, didn't gap down after that bad case or they suspended trials, or J&J had earnings. But when these situations happen, these hiccups, the stocks don't get really punished. I mean, maybe one-offs they do, but for the most part, they don't. And that's telling me the market, the big investors, are voting confidently that we're going to get a bullish outcome here.
Can I say something? I don't want to be misconstrued. Okay. I don't want to be, I think I come across like this Debbie Downer. I don't want to be misconstrued. We're going to solve this. But I'm saying, where should we be on October 12th on the road to solving this is the question I'm asking myself, because I'm constantly taking that temperature due to my shorter term time frame. And if you're supposed to be already passed and you're already legally allowed to distribute vaccines, as Dr. Fauci was optimistically touting a couple of months ago in November, December, where should we be now? And I just have this feeling that we're not quite there when we keep getting these Johnson & Johnson and AstraZeneca hiccups. I don't think that they're indicative that the drug doesn't work. I'm just looking at this timeline because that's what's priced into the market, in my opinion. Just wanted to clarify that. I think we're going to solve it and we're going to be awesome. But I still think you can make a boatload of money long a bunch of great stocks, which I have. I'm just that particular sector and, the broader case.
Just for the record, Jeff, I don't look at you as a Debbie Downer at all.
Thank you.
I like your view. I don't think Debbie
Neither do
Downer
I,
at
for
all.
the record.
Okay, Roger, like wrap it up for us.
I think that there's still some price discovery left in the drug stocks. I don't think we're there yet where everything is priced in, the good is priced in, the bad is priced in. I think that it's becoming more and more selective. In other words, in 3, 5, 6 months ago, hey, you're involved. It kind of like the internet in 1995. Are you an internet company? All-time highs. You know, back in March, if your company had anything to do with COVID, then buyers would be coming in. I think now investors are becoming a little more savvy in terms of stage 1, stage 2, stage 3, number 1. So I think there is some more upside, but I think we have to be a lot more selective than we were 3, 4, 5 months ago. That's number 1. Number 2, a lot of you guys talked about earnings. I don't think earnings with this particular sector is very relevant. I think it's I think it's kind of like Amazon and Tesla, where the earnings are a lot less important than future expectations of the company. So in terms of price discovery, I think there's a lot more upside on a narrower base of stocks in that biotech segment. And I also believe earnings are I also believe that entire sector is a lot less sensitive to earnings than other sectors in the economy in light of in light of COVID-19 and the fact that, you know, there's something on the horizon that's going to, you know, solve a major problem. So I think that after the vaccine, after 3 companies will come out with a vaccine, you'll see this natural price discovery be a lot more arbitraged. Till then, I think they're all going to be inflated up to a certain point, some more than others. And as we get closer to the discovery or the cure or the vaccine, you will see a much better arbitration of where the price should be versus now. Okay, so I think there's still a lot of money being put into it, but less than 4 or 5 months ago, and earnings are a lot less dependent than what the future of the company holds. Those are 2 things. Lastly, I believe that a lot of the companies are coming out right now who are going to give us a solution to COVID. And I just read this yesterday. I don't remember the context, but it was kind of like, you know, we're going to have a vaccine, but you guys should know that this vaccine is only going to work under these conditions, and it's only going to do these symptoms. And basically, after reading the article, and I don't want to get into the details of the company, but basically after reading the articles, it was kind of like, oh, okay, so it's a vaccine, but it's not really going to help most people. It's only going to help you if you have this and under this case. So a lot of what we're hearing about and a lot of these promissory things that we're hearing about, hey, a cure is going to come out it's not really as sexy as it sounds. What I'm trying to say is this is not going, and I'm going to say Jeff Zennari said this months and months ago. This is not going to be March is here or February's here. We have this vaccine. Everybody's going back to normal. The world is fine. And no. This is going to be a long struggle. It's going to be 2 steps forward, 1 step back. So I think because of that, I think there's going to be a lot of money, a lot of government money, a lot of central bank money flowing into the biotech sector. And we're not going to see true price discovery in that sector for a long time. With that said, we're going to see a trimming. Every quarter, we're going to see less and less companies going higher till we kind of get to the truth of where things are. But I don't think earnings is going to have a major impact on biotech. And I think we still have substantial price discovery, and we still are quite further away than most people, investors, and even the medical community seems to think. So I think we have to kind of give ourselves a little more of a break, so to speak, and a little more of a timeline.
You bet. All right, gentlemen, great food for thought as per usual. I thank you all very much for your time, and I look forward to speaking with you individually through the week or next week. Have a great week.